Florida's real estate market was once seen as a dream: sunshine, beaches, and endless growth. But what was once the golden state of opportunity has now become the epicenter of a financial storm. Over the past few years, home prices in Florida skyrocketed far beyond what most working families could afford. Everyone wanted a piece of the Florida dream. But now, the very same dream has turned into a ticking time bomb. As mortgage rates doubled, monthly payments went from manageable to impossible. Buyers pulled back, listings began to pile up, and what was once a seller's paradise is quickly turning into a graveyard of unsold homes. Across cities like Miami, Tampa, and Fort Myers, for sale signs stretched down entire neighborhoods. Properties that sold in days now sit for months. Homeowners who overpaid during the frenzy are watching their equity vanish overnight. The data doesn't lie. Median prices have dropped by tens of thousands in some areas, and inventory levels have surged to their highest since 2019. The deeper issue isn't just pricing, it's affordability. Wages in Florida haven't caught up with the cost of living. A family earning $60,000 a year can't buy a median-price home anymore. Rising insurance premiums and property taxes have made ownership nearly impossible for the average resident. Meanwhile, investors who once fueled the boom are now offloading homes at a loss, desperate to escape before the crash deepens. Experts are calling this a correction, but for many Floridians, it feels more like collapse. Local governments are already feeling the pressure: reduced property tax revenue, slowing development, and rising unemployment in construction and real estate sectors. Florida's governor faces tough questions. Why weren't warning signs addressed earlier? Why were corporate buyers allowed to dominate the market while ordinary citizens were priced out? The breaking point has arrived. Florida's housing market isn't just cooling, it's cracking under the weight of its own success. If things continue on this path, 2026 could mark one of the sharpest housing downturns in the state's modern history. The once unstoppable Florida housing dream is now a haunting reminder that every boom eventually meets its bust. Florida's housing collapse isn't just about high prices or bad investments. It's about a perfect storm of risk, cost, and fear. At the heart of this crisis lies one silent killer of homeownership: insurance. What used to be a manageable yearly expense has now turned into a nightmare for millions of Floridians. In just a few years, the average home insurance premium in Florida has tripled, from around $1,800 a year to well over $6,000 for many homeowners. In coastal regions like Fort Myers, Miami, and Naples, that number soars above $10,000 or even $12,000 annually. It's unsustainable. Families who worked their whole lives to buy their dream homes are now being priced out not by mortgages, but by insurance renewals. And when they try to shop around, they find no options. Dozens of insurance companies have either gone bankrupt or completely pulled out of Florida, citing the enormous risk from hurricanes, floods, and the rising cost of claims. Those who remain have jacked up rates to survive, passing the pain directly to homeowners. Without insurance, people can't sell, can't refinance, and can't even qualify for new mortgages. They're trapped, and the timing couldn't be worse. The 2026 hurricane season is already predicted to be one of the strongest on record. Flood zones are expanding. FEMA maps are being redrawn, and climate threats are now a daily concern. Even homes far inland are no longer safe from rising premiums. Every storm that brushes past Florida sends prices even higher. Investors are pulling out, builders are halting new projects, and some residents are abandoning properties altogether, simply walking away. The insurance meltdown has become the backbone of the state's housing crash. Real estate agents can't move properties because buyers can't afford the total package: mortgage plus insurance. Retirees who thought they'd live their final years in peace are suddenly facing financial ruin. And through it all, state officials are struggling to find a solution that balances business survival with citizen protection. Experts say if something doesn't change soon, the insurance crisis could drag the entire Florida economy down with it. Housing drives everything here: jobs, taxes, tourism, growth. And when insurance fails, everything else follows. What started as a pricing issue is now an existential threat. Florida's paradise dream is drowning under its own weight. For years, investors flooded into Florida like it was the promised land of real estate. Cheap taxes, booming tourism, and endless sunshine made it look bulletproof. But now, that same paradise is turning into a financial trap, and investors are quietly slipping out before the storm hits. The signs are everywhere: half-finished developments, for sale signs collecting dust, and homes being sold at a loss. The golden era of Florida real estate speculation is cracking, and those who came chasing profit are running for the exits. At first, it was subtle. A few Airbnb owners complained about empty calendars. Some landlords whisper about rising insurance and property taxes eating into profits. But now, the problem has exploded. Renters can't afford inflated rents. Investors can't cover the new costs, and property values are falling fast. Many short-term rental owners are defaulting because their once profitable homes sit vacant, victims of oversaturation and rising travel costs. Tourism has slowed, maintenance costs have soared, and even the most confident investors are realizing that Florida isn't the easy money it used to be. The market is now flooded with listings from out-of-state buyers trying to unload their investment properties before the bubble bursts. Hedge funds that once snapped up thousands of homes are now quietly dumping them. Institutional investors like Blackstone and Invitation Homes are pulling back, citing market instability. Meanwhile, local investors who believe the Florida boom would never end are left holding the bag. Some are being forced to sell at 20 to 30% below peak prices just to escape crushing expenses. And the ripple effect is devastating. Construction projects are being halted mid-build because developers can't secure funding. Banks are tightening lending standards, fearing another collapse like 2008. Even the luxury markets in places like Miami Beach and Naples are starting to cool off. The rich are still buying, but far fewer than before. The message is clear. Confidence is collapsing. The Florida housing market isn't just cooling, it's unraveling. The investors who build it up are now tearing it down by leaving. What's left behind are ordinary families and local communities facing plummeting values, abandoned projects, and uncertain futures. The question everyone's asking now: if the big money is leaving Florida, who's coming in to save it? Florida's skyline once told a story of unstoppable growth. Cranes everywhere, new condos rising by the week, and developers boasting record pre-sales. But today, those cranes are starting to disappear. The construction boom that once symbolized Florida's prosperity has turned into a dangerous freeze, setting off a domino effect that's shaking the state's economy from the ground up. Developers are halting projects mid-construction, banks are cutting funding, and workers are being laid off in droves. What was once a symbol of progress is now a sign of panic. The problem started with skyrocketing costs. Materials like steel, cement, and lumber have nearly doubled in price since 2020. Insurance premiums, already some of the highest in the nation, have become unbearable. Then interest rates rose, crushing loan affordability for both developers and buyers. Many projects that looked profitable on paper 2 years ago are now financial disasters waiting to happen. Developers who borrowed millions at variable interest rates are watching their margins vanish overnight. So instead of building, they're backing out, or worse, going bankrupt. And when construction stops, everything else starts to fall apart. Thousands of construction workers, electricians, and plumbers are suddenly out of work. Local suppliers, from hardware stores to transport companies, lose their biggest clients. Even small restaurants and cafes near construction zones, which relied on daily workers for income, are shutting down. Every unfinished building isn't just a lost investment. It's a hole in the local economy. The ripple effect doesn't stop there. Banks that funded these developments are growing nervous. With project values dropping, many lenders are tightening credit or freezing new loans entirely. Smaller developers are struggling to refinance, leading to defaults and foreclosures on half-built properties. This fuels even more panic in the market, as investors see empty shells of buildings, literal monuments to a broken system, lining the streets of once booming cities like Tampa, Orlando, and Miami. Home buyers, too, are feeling the sting. Those who prepaid for condos and unfinished buildings are left in limbo, unsure if their homes will ever be completed. Lawsuits are piling up, confidence is vanishing, and Florida's once limitless growth model is crumbling under its own weight. The construction freeze is not just slowing the economy, it's reversing it. And as more projects die before completion,